Hey everybody, Brian here from quantlabs.net. Just wanted to go over with you a set of criteria to find out the relationship of trading commodities and other products between two countries. In my case, I'm looking at the US and Canada with the US dollar being the base currency. So what I've done was I went to StatsCan, which is part of this government statistical analysis of Canada, the federal government. And at this particular link here, what you can find is the products of the entire country in their larger exports. So here you can judge that vehicles, aircraft, vessels, associated transport equipment is fairly big, and the biggest is, where is it? Right here, mineral product. So when you look at mineral product, what does that mean? What are the biggest? Well, it means that mineral oils, products of a distillation is the biggest. So when I drill down into that, it seemed that oil was part of that, petroleum oil. So I just took that as regular crude oil being out of Alberta, tar sands, as the big one. The other one that was fairly interesting was this vehicle parts, because I know here in Southern Ontario, vehicle car production is pretty big. So that is something else that we can track here. Vehicles and other railway. So that's maybe car parts and cars themselves from coming out of Chrysler, Ford, GM, Toyota, Honda. Got a lot of the big manufacturers here, and obviously they're going to the States. So a couple of things to take away from this is the two big factors coming out of Canada, according to StatsCan here from 2016, July. Oil is the big one, as well as vehicle parts. So, to come back to my list, how do you find these products to break it down on quantity, on how much is being exported? Well, I was fortunate enough to get the actual quantity that's being shipped out here at this link here in the StatsCan. But there's another way to do it by quantity for, let's say, mining. So here at Y Charts, which is a new provider, let me just load up a better browser here. So with the Y charts, you can see here that, geez, I can't even do this. It has been increasing and it's tailed off somewhat. Oh, sorry, that's the wrong chart. This is mining. Yeah, so this is Canadian mining chart. U.S. import-export, so the peak was in 14. Commodity, it's been dropping, and you can see here you can get monthly data. So you can grab the source of this. But the interesting thing is, you want one source, but you can subscribe to this, which I believe is about $40 a month for the professional service with the plans for Y charts, just as a tip. Might be just as good as tradingeconomics.com, but cheaper. But this professional service, I think from what I understand, is $40. I put a link up on that in a previous blog post. So that's oil. Another way to track that is if you look for, let's say, oil Fed, oil, Canada export oil. There is a, you can get the price of oil coming out of Canada, Canadian dollar, and the price of oil. Okay, to get a comparison between the Canadian dollar and the relationships, you can see here quite clearly that the Canadian dollar is dependent upon the price of oil. It's pretty close. So that's pretty important to understand. So that's going all the way back, since the early 90s. So that's why we're doing this. But another source that we could find is crude oil prices. Kind of important to compare the base currency pair. So you can use this as a source here for the WTI Cushing, Oklahoma price. Again, you can get it daily. I do believe you can get it monthly. Let's see here. I do know you can get it monthly. Crude oil prices, can't remember, but there is a way to do it. Here you go, monthly, and you can just download from there. Alright, so, and just use this code here, the MCoil WTICO. Alright, so that's another important factor that you would use. Now, this is to measure the trade between Canada and Canada exports into the US. So that's some of the hints that you could use to understand the relationship between exports from Canada into the US, and I'm not sure on the exchange rate that they would be expected to be paid if they're going to be paid out in Canadian or US dollars, but that will affect the price of the Canadian dollars as shown here in this relationship between the two. Okay, so that's pretty evident that the trade of oil, the price of oil, the Canadian dollar is reflected upon that. And again, part of the discrepancy here can also be the amount of oil being imported into the States from Canada. So the other thing that I wouldn't worry too much, but is this notion of vehicle sales in the U.S. that will probably translate back into how much product or how many vehicles or vehicle parts will be imported from Canada in the States, and that will be also correlated to the actual sales. So if I was to pull that chart up, you can see that there's been a steady increase in U.S. car sales. So I'm going to assume that the car imports or vehicle imports into the U.S. has gone up along with this, but there should be some kind of correlation between that and the price of, or the with a pair of the Canadian to the U.S. dollar. But again, this is the one that is pretty evident on the price of oil versus the Canadian dollar. So just want to show the importance of trade between two countries, specifically Canada and the U.S., how the price of certain commodities and import or product can have an impact on that relationship between the Canadian and the U.S. dollars. And again, this is just pretty well evident that historically, going back to the early 90s, I guess they started tracking it here since the 85 or so, 86. But there is some form of relationship between the two. All right, hopefully I'll help you out just to drop some hints on the balance of payments of trade, as well as the trading relationship between most likely commodities, and just as an extreme example, that Canadian dollar is a commodity dollar, and it's dependent upon oil, as you can see here. Hopefully I'll help you out. Talk to you later.